Gentlemen and ladies, how are you? YouTubers, friends, great to be with you again. Yep, so we're talking about BTCUSD. I've got it on an hourly, and I'm going to try to keep this YouTube kind of short. The message is a simple one. The bear channel that we've drawn for some while now, following the capitulate sell from up top there, has continued to be held and respected. Yes, you did have the Bitfinex dip low. It did dip on other exchanges, but it didn't take out that low there. Then we went to the top, the bottom, the top, the bottom. Now, the last time here, this was very convex and rolling over, and I said, yeah, you know, it's pretty bearish like that. Then it actually came down to that same level line, bounced off it, had another little dig, bounced off it, and then pushed quite strongly off. I say quite strongly. This is all very low volatility period in a channel, but he says there's something that's going down that threatens the possibility of that breakdown. There is a key impulsive event coming up for crypto. We are at another weekend. I thought already this might have happened. It's amazing how long things can go before they happen. Think of our debt experiment in our financial economic system. Many people have thought it should have failed long ago, and in the same way, this just goes on that little bit longer than you think, and we've squeezed and we've squeezed. Where is the pink line coming from? Quick update from when I originally did the video. This is a long time frame draw. Let's pull it through. Let's get it done. Long time frame draw for Bitcoin from the all-time highs, trimming the tops. We've had successively lower lows. I'm going to just remove the volume, or just let's pull that out above the volume so that we don't lose the candles. We've had continually lower lows across the tops here, and we've been squeezed into what I've called the hard and soft floors. The hard floors start at 7. There's a very key critical number at 6.8. It was the neckline of this inverted head and shoulders here. And then I talk about the hard floor being at 6.2 and 6,000. So these are the sort of the early warning, and that's your final hard floor point. That's your first soft floor area, and then when you're another key element. So we've now been in this zone at that inverted head and shoulders. We didn't spend much time in the initial plunge or there, wicks only, sitting in the soft floor and rallied. Then we got pushed down through. Then we came back again. We had a weaker rally. We didn't get much above the 7,000, tapping out at 7.4, while previously these rallies, that was to 8.5, that was into 10,000. That was well into 11,000. So the highs have got successively lower, so there's pressure selling. I've drawn the pink line. If you log scale it, I've drawn other ones from here. Essentially, it's a descending triangle, and you have these critical levels. So something is coming because we're squeezing into a very tight space. On these bigger time frames, I've continued technically as an HVF method technical analyst. I've continued to assert that overall, generally, the structure is bad. In other words, bad as in bearish. It's not bad. It's bad if you're long or if you're holding coins. It could affect your profitability adversely. But so let me just reframe as we drop a time frame. So that is broadly been my view. It is bearish. You are sitting in this zone and you can't escape it now. You're stuck between the hard and soft floors now, far more, and there's incredible low volatility, and there's a precursor to a major event to happen, which could in fact be a sell-off. And that's been my overriding position up until this date, and I've continued to state that. However, so here's the big but. Here's the big but of what I'm going to say. This has gone on for so long. It's been quite ambiguous. So the macro structure is not ambiguous to me. It's normally a bear, but it is late in a bear trend. So here's the negatives for the bear side. It's late in a bear trend. You've gone from $20,000. You're trading 6.5 today. There's already been a lot of fizz taken out. But as I showed on the bigger time frames, there's scope for this on a logarithmic level to drop pretty damn far and still to be in a macro bull, which is my take on crypto markets, a macro bull with over performance periods and sell-off periods. So that still remains. So none of that macro assessment has changed. There's just a slight concern for the bears and good news for the bulls, that on a shorter time frame in this channel we've now created some structure. The 6-8, the sort of the warning light for the soft floor, and now actually a ceiling. The warning light was tested there, broke back down, tested there, broke back down. This momentum to this down leg is a falling wedge. It's not nearly as abrupt as that sell-off was abrupt. And the resulting pop out the falling wedge over there was impulsive, and it hasn't, apart from a dip, hammer dip overnight, it's actually held itself. So while in crypto we do get falling wedges that pop and then roll over and then trade lower than even the lowest point in the wedge, in other words they continue to downside, it's not a reversal pattern. Particularly in crypto you had a rising wedge, you didn't get a fall down, you actually went into a new rising wedge higher and only then did you fall down. You don't have clarity on direction. What you've got is a breakout and then pretty chilled, holding on, little bit of a test to the downside, bought back up, hammer. So we are once again in a squeeze point. We're once again in a squeeze point. Now we've got, I call these are the kind of the hard triggers. A break of the 6-8 is going to be a beginning of a movement up in my view. A higher chance of that being the case. And a break of this high, which is 6,840, even more so. That doesn't mean full-blown 100% new melt-up bull. It means the potential for an upside break of this pattern that would have a target that could take it through 7,000 and some, and possibly the chance that we make the first new higher high, which would mean kind of the end of the bear. So if we went here, the target for this push up would be in and around 7,100. That doesn't mean yet it's taken the full high of 7.4. It means it's a couple hundred short, but it could be a pop that. There's still slightly more shorts out there. There's 4,000 net shorts. The last time I looked, there's about 29,000 odd shorts and about 26,000 odd longs, leverage longs. So there's a net 4,000 short. It's not at the most extreme, but it's still generally more short than longs. These people can often be right, but they can also get a haircut. The shorts have been slightly more accurate than the longs, but they've got short squeeze before. I was part of that when it happened, so I know what it is like. You don't want to be in too crowded a room with too crowded a view. So if this turns out to be an upside and we run 6-8, that's a key level that gets run, and it could lead to the soft floor, now a bit more of a hard ceiling, getting above that level again. That doesn't mean all chances of ever selling off or having a spike down are done and are cooked. That's it, rah only bull. But this structure, if we're just analyzing this structure within the flag, it seems each time we've touched down there, we've pushed off. We had that little dip, we pushed off. So we could actually be in the beginning of an upside break as soon as 6,649 falls. That could see you run 7,100. If you run 7,100, you haven't invalidated the bear fully, but you're making quite a high. If you go all the way up to 7.4, you then have the possibility of twice hitting that level. It depends how far back down you come. You might get a double bottom and you might get more bottoming, but technically you'll have a break out of this lull. People who've been trading crypto right now must be thinking it's the most boring market in the world, especially if you've just started, because the volatility has been exceedingly tight compared to what we've been accustomed to. So this little push could catch a lot of people by surprise, just as we come to a weekend after a non-farm payroll today, bit of dollar, bit of people shuffling in and out of currencies. Maybe a little bit of that starts to bleed into crypto. We don't know. People forming views. The alternative is if we break to the downside and we take out this flag-like grind up line to the downside, that's like a soft trigger similar to taking out the pink line that I've drawn right from 20,000, nipping all the highs. So you can see we're being squeezed into a very small period. The first soft trigger could occur very soon, the pink line falling, and then the next will be the horizontal level of 66.49, the next is 6.8, the next is 68.40, and then the target is 7.100. Those are your key points along this development. The problem areas would be a breakthrough, either the red line that stayed below the red line. This is an angled line, so I can't give you a price for it. It would depend when it happened. But certainly a run of this point low would be a beginning of a warning, 6.424. And a running of that, 6.327 would again also be a warning and would show the first signs of expansive price behavior since we've been stuck in this range-bound bear flag-like channel. But this is not a traditional bear flag because it's already taken back around between 50 and 61.8% of the original fall, first of all. As strong as that fall was, it's also in time frame wise gone on for a very long time. So normally a bear flag channel will be narrower and shorter in time duration for that capitulation. So this is actually a rally channel trend of some scale that may be about to lose momentum and collapse, or it's got a squeeze in it and has got the possibility that it's going to spark and have a pop out of its channel to this upside and, as I've said, to the downside. So it still feels an impulsive move is coming. Felt that would have occurred already. It hasn't, but it is getting closer and closer to a number of soft triggers that we've defined running, and they're getting tighter and tighter around it, and some of them are angled lines, which mean there's a squeeze point as well. So it's got to break something at some point soon. This weekend, it will have certainly crossed either the pink line or this lower red line. Largely, even if it stands still, the whole weekend, it's going to be bummed through the pink line. And of course it can't do that. So I suspect this pink line soft level will be taken out. And it's even possible it could take out both. It could take it out and then also break down through the red. So we don't know. So those are the beginning of the early soft triggers. The key levels that I really value are horizontal levels. And these start at either the 6.649 or the low of that hammer at 6.530. They start to get more confirmation as you go through these levels. 6.8, a big one on the bullish side, and on the bearish side, a big one, 6.329. So it's put up or shut up time soon for this, and the direction has been very, very ambiguous. But this little segment here, if I just looked at this, I'd probably say if I was forced, I'd bias to the long side for it to pop. If I look at the whole macro pattern up until this point, it was largely bearish structure, which is why I've come into this always stating bear, bear, bear. Now, more neutral and more open for this initial move actually to be to the upside. I always said it could be, but I would say this primer here is now starting to suggest it could be an upside break. So make of it what you will. If in doubt, leave it out. Don't lose money on this. It could be violent. You could have stops run if you have orders in the system. You could be shaken in one way and then shaken out the other way with conflicting news just being released one after another. You could get thin trade over the weekend and people shoving the market around. Who knows? Play safe. If in doubt, leave it out. Rather don't lose anything than be too big. Sizing is very, very critical. So with that and all those memories, thank you for watching. By the way, register for the pre-course. Very few, just a handful. I think 15% of the seats still available on the pre-course, and we expanded it from the original number due to popular demand. And also, big one, we're going to do a couple of things that we'll release information to on those that have liked our Facebook page. So if you want to receive information and updates, these will be free updates every now and then. Push through our Facebook page, go to Facebook, type the Market Sniper. You will find the Reset Sniper, the Crypto Sniper, and the Market Sniper logo. Click a like, join, and just say hi in the comments to one of the recently put items in there, and you will be kept up to date via the Facebook page on our thoughts on the markets. So pop over and do that, and I look forward to seeing you again. Thank you for being a subscriber. I appreciate you. This is not advice. It is more just balancing up the bear bias to the fact that there could be a fractal now that could do a push to the upside and or downside. We're not clear at this point, but the market will show us. And this has been one of the most ambiguous situations that have kept on going right into the nose without giving the game away. So just be careful and watch. And if you don't have the time and you're going to be off the screens this weekend, make sure you don't get killed. So it's a defense. It's a weekend for defense. Play defense. Go watch Conor McGregor fight Khabib in the early hours of the morning. Okay, bye for now, guys. Enjoy it.